Good morning. We had the jobs report come out. What I want to show everyone is that the Dow Jones is down 152 handles. NASDAQ Composite down 52. The stock market's been open 5 minutes. Dow Transport's down 111. S&P down $19.67 to the 1540 area. Now, those job reports that came out were not favorable for the marketplace or the bull for that matter. One thing I will tell you about it, they were expecting 268,000 jobs. Non-farm payroll jobs came in at 88,000. Then there was a big warning out of FFIV, down 16.7% this morning. Markets at all-time highs. We have told people to cash in this big bull run, which we've had a great rally up until this point. For the last 2 to 3 weeks, we have been putting in a major overbought topping pattern in the market. We have warned day traders, we have warned public investors, and it was time to cash in. The quarterly earnings report is going to start Monday. The trade deficit narrows to let people know. I can tell you a little bit about the unemployment report, disappoints in March. A lot of people were expecting 192,000 jobs. The consensus forecast was that they would add 210,000 jobs. They did not. Only 88,000 new jobs in the month of March. When we start looking at these kinds of numbers, you got to go back to 1979 to look at the labor force, because when you equate it mathematically, our labor force in the U.S. is at extreme lows. And once again, the growth that the bull is always pumping markets. Listen, we love bull rallies. We never fight the tape. But let me tell you something. The correction that this market needs and the growth that's coming, we do not see 3% growth right now. No. The Dow Jones on that opening bell was down 168 points on the opening bell. Japan was down big overnight. They came back. They put their curves in. The other places such as Germany, France, and other places around the world are all down. Markets are going to have this correction. One of the things that we are going to focus on with our worldwide network of traders is which stocks, as an individual stock pickers market, are we going to want to buy. I will tell people that when I did the FFIV, that's this stock right here, FFIV, it's right here. You can see that FFIV is down 19%. They gave a warning, down $17. They are the backbone of the internet. It's a great company. They gave a warning. We think that our forecast across the multiple side is that everybody looks forward in multiples, but the current environment and the short-term environment is that we could see where some of the earnings could be disappointing and revised down. The things that is the most disturbing part, here's Google down 1.33%, down $10.85. We have featured this trade from $840 all the way down here to these lows. We've been buying puts. We have all of that updated stuff on stockmarketfunding.com. We will fund your trading accounts. The market makers will do the analysis. They'll give you the orders. They'll give you the entries. They'll give you the exits. They'll give you the profits. We're going to watch and see that every one of these gap downs that the bull comes in and buys and had made higher highs all year. However, with that unemployment report, we're going to watch to see if this bull sentiment changes. And every great bull run has to correct. But I will tell you the unemployment numbers are very, very, very bad, and we'll have that updated on the website. Right now, you can clearly see the Dow is only down to 143 handles. We've been open 9 minutes on the opening bell. We'll update all the charts later through the day. We'll see if that bull steps in off of the bottom, wants to be a hero before the quarterly earnings start on Monday. So this is the opening bell. They always buy off of the bottom. So we're going to see exactly. They've already bounced the Dow 30 points. It's a very disappointing number. The bull keeps coming back and fighting back and fighting back. We don't see the growth. We don't see the unemployment. Hourly earnings are down. That's the workforce per hour. Cost of living goes higher, but the cost of your wages that you get paid by the hour are not going up. They're flat. So the labor force is not back where it is. The bull's going to try to come in and make a great case off of it. The numbers are horrible, period.